This is Chris Mosley, Chair and Founder of the Sherman and Howard Insurance Recovery Group. Our group will be providing a series of webinars addressing insurance coverage issues arising out of the coronavirus crisis. This webinar will focus on business interruption insurance and its potential to cover losses businesses sustain as a result of the nationwide shutdown. The coronavirus has caused many businesses to shut down. Some shutdowns have been mandated by state and local governments. Other businesses have closed voluntarily, but the result for all of these businesses is the same, a substantial downturn in business income and revenue. Many businesses are now looking to their insurance programs to cover these losses. Specifically, they're looking to their business interruption and contingent business interruption coverages to see if those coverages could cover some of the losses. This webinar will focus on business interruption and contingent business interruption coverages and their potential to apply to losses your business may sustain as a result of the current situation. In this webinar, we will be covering 3 topics: key coverage issues for business interruption and contingent business interruption coverages, legislative activity around those coverages, and what you can do to best manage business interruption losses. So let's first discuss what business interruption coverage is. It's a coverage typically found with a commercial property insurance policy which most businesses purchase. It is intended to cover loss of income your business sustains as a result of physical damage to your premises, which causes a slowdown or suspension of your operations. For example, the coronavirus shuts down your business, and as a result, you lose business income from your inability to operate. Contingent business interruption coverage is similar and also is found in many commercial property insurance policies. This coverage, however, is intended to cover loss your business sustains as a result of physical damage to the premises of another company upon which your business relies, and which then results in a slowdown or suspension of your operations. For example, the coronavirus shuts down one of your key suppliers, and as a result, you lose business from not having adequate supplies for your business. This is something that we're seeing in grocery stores across the country. There are 2 key coverage issues when it comes to determining whether business interruption or contingent business interruption might cover your coronavirus-related coverages. They are direct physical loss and the virus exclusion. Commercial property policies, including the business interruption and contingent business interruption coverages that come with those policies, generally require that any loss be the result of a direct physical loss. These policies, however, typically do not define direct physical loss. And so the key issue in determining whether a business interruption policy may cover coronavirus-related losses is whether coronavirus contamination constitutes direct physical loss. So the argument that policyholders, that is business policyholders, will be making for coverage is that the coronavirus has contaminated equipment at your business, rendering your business premises unusable. To that end, the argument will be that the contamination itself constitutes direct physical loss. The first case in the country filed seeking coverage for coronavirus losses is the Cajun Conti case that was filed on March 16th in Louisiana. And this is exactly the argument that the Cajun Conti restaurant was making, that the contamination or that the virus had contaminated all of the restaurant's equipment, thus making that equipment unusable. Insurance companies will fight back on the direct physical loss requirement by stating that the coronavirus contamination itself does not cause any physical injury to tangible property. And what the insurance companies will say is that direct physical loss requires physical injury to tangible property. And remember, most commercial property policies do not define the term direct physical loss. Insurance companies will also likely make a second argument, and that is that the policyholder, that is your business, will be unable to prove that the coronavirus contaminated your specific premises. And the difficulty in coming up with that proof is that many business folks aren't allowed to go into their businesses, and as a result will not have the opportunity to test the surfaces in their business to see if those surfaces are infected by the coronavirus. So another issue that we anticipate insurance companies will raise. So with respect to the direct physical loss requirement, whether coronavirus triggers that requirement, the answer is there is no clear answer. There is case law in analogous situations which have addressed this in the past, dealing with issues such as SARS or asbestos or other types of contaminations. And the case law in those the law in those cases really goes both ways. So this is going to be an open issue between the business community and insurance company, and we expect that issue to be open for quite some time. The virus exclusion could be more problematic. It too is found in most commercial property policies, and it is intended to preclude coverage for losses a business sustains that are caused by various pathogens, and those exclusions typically expressly include viruses. The virus exclusion was added to commercial property policies in the early 2000s in response to the SARS outbreak, which is very similar to the current coronavirus outbreak. The typical exclusion is broad and can provide a significant hurdle to coverage for virus-related losses. However, not all commercial property policies contain a virus exclusion. The Contingent case that I mentioned previously involved a policy which did not contain a virus exclusion. So it becomes very important when addressing this issue to review your policy closely to see if it contains a virus exclusion, and if so, the breadth of that exclusion. Given the significant losses that the U.S. economy is suffering as a result of the nationwide shutdown of businesses, it's not surprising that legislatures at the state and federal level are trying to get involved. In 2 states, legislatures have begun the process of introducing legislation seeking to confirm that business interruption coverage covers coronavirus losses. Those are New Jersey and New York. Both states are in the very early processes of moving forward with proposed legislation, and the ultimate outcome of that legislation remains very much unclear. But it does raise the question as to whether other states in the country that have been significantly impacted by the virus will also seek to introduce legislation. Congress itself has been getting involved at a couple of levels. On March 18th, 6 members of Congress issued a letter to the insurance industry requesting confirmation that business interruption coverage applies to coronavirus-related losses. That same day, the insurance industry provided a response stating that business interruption coverage is not intended to cover losses from communicable diseases. Although that letter did not specifically reference coronavirus, it's clear that's what the insurance industry was referring to. We expect the debate between the insurance industry and legislatures to continue for some time, given the magnitude of losses that U.S. businesses are sustaining. So what can you do to help manage your business interruption risk? Well, there are a couple of things. First, it's very important to review your policy carefully. As I discussed previously, every policy is different. Some policies contain a virus exclusion, some don't. So it becomes important for you to discuss your policy coverage with your insurance broker and with your insurance coverage attorney, such as those in Sherman and Howard's Insurance Recovery Group. It is also important to keep up to date with what's going on in the state legislatures, Congress, and in cases such as the Cajun-Conti case. We in the Sherman and Howard Insurance Recovery Group will be keeping watch on those issues and providing updates as they become available. Finally, and most importantly, it will be important for you to develop a business recovery plan which assumes that you will not receive any business interruption or contingent business interruption coverage. As we discussed, the potential hurdles to coverage are real, particularly with respect to the dispute over whether coronavirus contamination constitutes direct physical loss and the potential existence of the virus exclusion. However, more importantly for the short term, we can expect that the insurance industry is highly likely to challenge business interruption and contingent business interruption claims very vigorously, given that the virus has affected virtually all businesses. The dollars at issue for the insurance industry are significant. So it becomes important for you to develop a plan for your business recovery with the contingency that you will not have these coverages. If the coverages come through for you, then that will be an added benefit to your business. Sherman and Howard is here to help the business community navigate the challenges posed by the coronavirus. That includes assisting businesses in working their way through the insurance landscape as we proceed through this unprecedented time. If you would like to discuss your business interruption coverage or any other coverage issue related to the coronavirus, please feel free to contact me or any other member of our insurance recovery group. We would be happy to help you. Thank you.